Boo! At the open, all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Becky quick. While the average man looking at this, it's sad like she fine as yeah. I'm over here looking at tails and whips like 5-6. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETFs, making profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. and I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them cans, make profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang, making profits. We some snipe.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. We have a busy day of earnings. It's also a CPI day, a wild, unexpected day in the markets. I'm going to be honest with you guys. I did not expect this from the markets today. We'll talk about what the markets did. We'll talk about the inflation data. We'll talk about earnings. We'll talk about what we expect from tomorrow's inflation data and how we're going to make some money throughout the rest of the week. Some updates on some current positions that I took some profit off on today, but I'm still in. We'll go over all of it right here, right now. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you didn't know, last year we received the 2024 Benzinga FinTech Chairman's Award for Best AI Analysis Tool. My business partner and I were actually in New York City just a couple of months ago, up on stage at the Benzinga FinTech Awards ceremony, receiving that award. I believe we do have an image. Oh, there it is. There we are, right up there on stage, receiving that award at the Benzinga FinTech Award. So if you guys are looking for AI tools, AI trading assistance, AI analysis, whatever it is, look no further. Our tool will help you guys become better traders, help you guys get better analysis and trade ideas that can help you guys make money. All right. So it's an honor to receive that award. And it's nice to see that industry leaders like Benzinga are recognizing True Trading Group for what we are doing with AI technology. But we're not just about awards. We're also the fastest growing and highest rated premium online education platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual mentorship and coaching for stocks, options, crypto, and futures. We cover day trading. We do swing trading. We also cover long-term investing. And we're going to hit on a bunch of my long-term portfolio picks for 2025, which are flying to the upside right now. I'm very happy with a lot of the stocks that we bought in the long-term portfolio coming into 2025. I publish a market outlook report for free for all of our members every year. It tells them exactly what I think the markets are going to do this year, what sectors I think are going to do best, what sectors I think are going to do worst, what stocks I'm buying, what stocks I'm selling. Everybody gets that report for free, either the last week of December or the first week of January. It comes out every year. And some of the stocks that we bought for this year are ripping face to start off the first 2 months of the year. And some of them have earnings today that we're going to get to in just a few short moments. But why should you listen to anything it is that I discuss on this live stream? It's a great question. It's not because I have a cool painting of a bear and a bull behind me. That's not why you should listen. It is because I did not figure this stuff out on my own. I began my trading career working at T3 Alpha Fund in New York City. While there, they had me go through a training program before they let me touch $1 of the firm's money. And then 2008 happened, and that was the Great Recession, the big stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. Now you fast forward, I'm the co-founder and head trader of True Trading Group. And along with my team of 8 other professional full-time trading mods and an over 30-person staff, we've helped thousands of members from all over the world to reach their goals. We have 10,000 members in 114 different countries, truly a global community here at TTG. So if you guys are ready to learn, trade, and profit for real, you come to the right place. I go live on this channel 6 days a week, Sunday through Friday. So subscribe to the channel, smash the like button, show some love, turn on your notifications, don't ever miss out on any of these live streams. I see there's a lot of people that are wondering, why did Reddit crash? Why did Reddit crash? That's the question that everybody seems to be asking me here on this fine day. So let's get to it. Okay. Let's get to it. All right. There's a lot that I want to cover with you guys today. One of which will be all the earnings reports that are coming out right now. But I also want to go over with you the inflation data that we got this morning. And what the market's reaction to it was, because it really is a telltale sign of something and gives me a pretty clear message that I want to make sure you guys understand. So we're going to get into all that, but let's first hit on earnings, and we'll get to those earnings first. And the one that everybody seems to be asking me about is Reddit. As Reddit is trading down 13% on the day, and I want to just kind of go through and dig through this with you guys. So their earnings were actually pretty good. Their earnings were 36 cents versus analyst expectations of 25 cents. Sales were also higher than expected at 428 million. Analysts were expecting 405 million. They see Q1 revenue of 360 to 370 million. That's higher than analyst expectations of 358 million. The reason why the stock is down so much is because their daily active user count was a pretty significant miss. They did not get anywhere near the amount of new daily users that analysts were expecting them to get. There was a lot of excitement behind ad revenue for Reddit, a booming and growing user base, and then implementing AI onto that platform with different AI tools for that user base and to optimize the online the advertising spending for their customers. And they missed on those new user numbers. And that is why Reddit is trading to the downside, even though their numbers are not bad. These are not bad earnings reports. You guys have to realize, this is why I always tell people, I do not position myself in trades before earnings, because I don't know what the stock's reaction is going to be to an earnings report. It is not as simple as, oh, they beat on earnings, so therefore the stock should go up, right? Wrong. There's a lot of different pieces of information that a company gives you in an earnings report. What they did monetarily wise the previous quarter is one piece of a long list of information that you get from an earnings report. The company also is going to tell you what their guidance is for the next quarter. And I'll tell you right now, it's more important what a company's guidance is for next quarter than it is what they did the previous quarter. So a lot of times you'll see a stock that could trade to the downside, even though they had a blowout quarter and they beat earnings, but their guidance for next quarter was soft and was less than what analysts were expecting, and the stock will trade to the downside. A company like Reddit, which is a social media platform that is, younger in age, that saw this massive explosion of users during COVID. The real big thing with Reddit is, are they able to maintain that user growth rather, to get them to the point where they can start generating a lot more revenue through advertisements like Meta with Facebook, right? And Instagram and TikTok and all these other platforms, and Snap and Pinterest and Twitter or X, all these other platforms. It's all about eyeballs. The more users YouTube, Alphabet with YouTube, the more eyeballs, the more users you have on the platform, the more money that you can generate in ad revenue. So the fact that they were not able to meet the analyst expectations of those new users is the reason why the stock is trading to the downside. But I don't think that is cause for massive major concern, because the numbers are there. I don't necessarily like focusing on users. I care a lot more about how much money can you generate from the users that you have. That's what I think is a lot more meaningful. Now, full disclosure, I do not own Reddit in my long-term portfolio. I do not. It is not a stock that I have in the portfolio. But if you are looking for entry points on Reddit, there are 3 clear-cut support levels that if you want to own Reddit, that you can be a buyer at. I am not buying Reddit. It's not a company that I know the stock has done incredibly well for the last year. It's not a stock that I'm putting in my long-term portfolio. The support levels that you guys can be looking at, okay? The support levels you could be looking at are literally right where we are, 180. 180 was this previous level of resistance and is now the 50-day moving average. That dark blue line on my screen is the 50-day moving average. That is support level number 1. Support level number 2 is down at 160. 160 was this previous pivot top on that gap up from November with their previous earnings report. And then you guys can see here, support. That is support level number 2. And then final support level number 3 is at 140. And 140 is, again, previous pivot top. You gapped above it with an earnings report. It became support. And then you rally to the upside. And then there's the 100-day moving average. I'm going to delete these other lines not to confuse you. These are support level 1, 2, 3 for Reddit. If you want to be a buyer of Reddit in your long-term portfolio, those are the price points that I would say are good spots to be a buyer. But again, I personally am not a buyer of Reddit on this drop. I would consider it to be a buyer if this thing were to pull back deeper to 140 or 160. But for me, it is not a stock that I'm going to be adding in my long-term portfolio even with the 14% pullback, as the stock was just at $230 2 days ago. It's now trading down here now it's trading down here actually 184 to the downside here. All right. So this is a support level. I wouldn't be surprised if the stock were to bounce from here. You have the 50-day moving average. You have that previous price structure from December and January resistance, and that should now act as an area of support. Otherwise, you look for a pullback to 160, and I would say that's a spot where you should look to be a buyer around 160. Okay. So there you guys have it. That is the analysis of my thoughts there on Reddit. Again, full disclosure, I do not own Reddit in my long-term portfolio, and I do not have a plan on purchasing Reddit in my long-term portfolio at this time. Okay, so that is that. Let's keep things moving, and let's get to one of the stocks that is in my long-term portfolio and is in my market outlook report for 2025 that gets published to all of our members, and it is Cisco. One of my themes coming into 2025 was I wanted to look for growth in technology stocks that do not have crazy valuations. As I looked at the markets coming into 2025, one thing that was pretty clear to me was that valuations were stretched. Valuations on the S&P were stretched. Whether you look at a forward PE or a trailing PE, valuations are high. And when valuations are that high, it does not leave a lot of room for disappointments. It doesn't leave a lot of room for error. It's kind of, you've heard the phrase, maybe that stocks are priced for perfection. And I came in thinking to myself, well, if inflation is going to be higher than people had originally thought, less rate cuts than people thought, then that means interest rates will be higher than people thought. And that puts pressure on equity prices because of something called equity risk premium that we can get into at another time. But this equity risk premium is how much more of a return can you get in an equity to offset the risk of owning an equity when you can get a guaranteed 5% return in a government bond. So the risk-free rate of return is the interest that you can get when you guys if you were to go and buy a 10-year treasury or something like that, you can go ahead, you can get a 5% interest rate, whatever it is. That is a risk-free rate of return. So if the equity risk premium is low, okay, and it'll be low between how high you can get stock prices to move or how much room there is for equities to move higher versus what the actual risk-free rate is, equities become less attractive, okay? So when that risk-free rate goes down, equities look more attractive, and you're willing to take on the risk of an equity going down because you could take a loss owning equities. You're not going to take a loss owning a bond. If you hold it to maturity, you can't lose on it. That's why it's called the risk-free rate. Okay, so that's something we can talk about later. So what I said coming into this year was I wanted to look for stocks that had a little bit lower valuations. One of the areas that I went to were some of the old tech dinosaurs that were getting involved in AI that had very low valuations. Two of those companies that have very low valuations are Cisco and IBM. I know it's not sexy. I know it's not AppLovin or NVIDIA or Cloudflare, right, or Shopify, but these are stocks that pay solid 3% dividends. These are stocks that are trading at 16 times earnings, so well below the S&P 500's trailing PE and forward PE. These are at like 16 times. The markets are at like 22 times, so they're cheaper than the overall market. They pay you a solid dividend, and they're getting involved in AI. And Cisco just reported earnings, and they are fantastic earnings. They beat earnings per share 94 cents versus 91 cents. Sales were also a beat, 14 billion. Analysts were expecting 13.88 billion. They see their next quarter guidance on earnings per share of 90 to 92 cents. Analysts expecting 90. Their revenue guidance is 13.9 to 14.1. Analysts only expecting 13.86. They see full year EPS of 368 to 374. Analysts only expecting 366. And their revenue guidance is $56 to $56.5 billion. Analysts only expecting $55.9 billion. But here's the real kicker on why the stock is moving to the upside. They increased their dividend, and they approved a $15 billion share buyback. Stock is booming on the back of that. Now, again, this is Cisco. This is not a stock that's going to go up hundreds of percent. This is a low volatility stock that I think is a decent place for investors to hide out and get a nice solid return without having as much volatility of a stock that has extremely high valuation. So I put this in my market outlook report. The stock was down around $59. It's now trading up at 67. And you got the dividend hike and you got the share buyback. And I said in my report that I actually felt like this could be the year that Cisco finally gets back to its all-time high that it put in place during the dot-com bubble. The stock put its all-time high in up at $82 in the year 2000. It has never gotten back there since. You have a huge resistance level at 70. So I do expect the stock to pause at 70 and then maybe pull back and consolidate in the mid 60s. But I think that what this company is doing with AI is a much slower, more methodical approach. They're not just blindly spending tens of billions of dollars. They're doing it with a little bit more strategicness. And I think it's a decent spot to be. So great earnings there. Great earnings there from Cisco. And you already just got good earnings from IBM. Again, IBM at the time of my market outlook report was at $220. That stock now trading up at $254. That is a new all-time high for IBM. And that is also a company that pays a nice solid dividend with a very low valuation. Okay. Is Reddit going down a scare tactic? Zaid, I don't know what that means, a scare tactic. And just asking that question, it worries me because that means that what you're saying essentially is that there's some forces that control the market that are going to push a stock down just to scare you and other retail traders into selling. So then everybody else can buy the stock and then laugh at you later. It's not the way that the markets work. It is the biggest misconception out there. Whoever told you that, whatever Discord chat that you're in or whatever Reddit page that you've read that on, it is not true. There are not this evil band of market makers out there that are just hunting for like retail trader stop losses or like, hey guys, let's take this stock that's currently at $220 a share and let's sell it all the way down to 183. Well, how much money is that going to take to sell the stock down to 183? I don't know, hundreds of millions, if not billions of dollars. But let's use that money to sell the stock down just so we can then buy it back when it gets to 180. It's just not true. It's not the way that it works. The stock is down because they missed on their daily active users. Okay. Their earnings were good, but the stock sold off because they did not meet analyst expectations of new users and daily active users on their platform. That is a problem for Reddit. Now, I don't know if it's a long-term problem. Their earnings were actually really good, even though they didn't meet the user numbers, which shows efficiency, profitability, margins, and growth within the company financially. That I think is actually a pretty big positive sign. Maybe there was a little bit of a blip there. If they can get right back into that user growth the next quarter, I think the stock could recover. There's a couple of areas that I think are decent buys. 180 and 160 are two of them. Okay. All right. So those are my thoughts there. So that's Reddit. We've got Cisco and Dutch Bros. Dutch Bros is exploding up 24%, right back to its all-time high that was put in place in 2021. Shout out to all my Dutch Bros people out there. I've actually never been to a Dutch Bros. Bros made up any losses for the year. I made over $8,000 in the after hours trade. Way to go, David. Great job, man. Really great job there. Really nicely done. Dutch Bros is, for those people that might not know what Dutch Bros even is, it's a coffee shop company. It's like a Starbucks. Okay. It's not nationwide yet. It is regional. I don't think there are any Dutch Bros in my area. I mean, I'm in the Northeast, New York, New Jersey, Connecticut area, Pennsylvania. I don't think there's any Dutch Bros. If there are, I've never seen any of them. They're really out west or in the Southwest. And I did drive past one, I believe, when I was in Arizona, but I didn't go inside. But everybody that I've ever talked to that has been to a Dutch Bros absolutely raves about it. They love it. And I am bullish on Dutch Bros. I really am. I've been bullish on Dutch Bros now for a little while. And I'm bullish on it because of what I hear from the customers. You know, when I hear people that talk about Dutch Bros, they like it. A lot of them like it better than Starbucks. So I think that it's an up and coming company. It's interesting how well they've been able to do, because coffee is an extremely competitive sector. There are so many people, there are so many companies that are fighting for that coffee market. You have Starbucks, you have Dunkin' Donuts, you have McDonald's, you have Wendy's, you have Tim Hortons. You have 7-Eleven, you have Wawa. There are so many companies that are fighting for your morning cup of Joe. So it's extremely competitive. And Dutch Bros has been doing a phenomenal job. So I am very bullish on Starbucks. I'm also bullish on Dutch Bros. I think Starbucks makes a new all-time high in the next 1 to 2 years. Ever since they made the CEO switch, where the CEO from Chipotle left Chipotle to become the new CEO of Starbucks, that day that news happened, I told everybody in True Trading Group, I am bullish on Starbucks. That CEO did what he did with Chipotle is exactly the problems that Starbucks has had for the last couple of years, which is why Starbucks has done poorly for the last couple of years. They got rid of the old CEO, who I thought was terrible. They brought in this guy. I think he's an absolute rock star. He's going to turn Starbucks around. He's going to bring that company back to profitability. He's going to get costs down. He's going to start to increase margins. And I think quality and customer experience is going to continue to flourish. And I expect that stock to make a new all-time high in the next couple of years. I really do like Starbucks. I also do like Dutch Bros. All right. Continuing on, let's keep things moving. We have Robinhood. What Robinhood has done, I will be completely honest with you guys. I've been wrong about Robinhood. I was never a fan of Robinhood. I mean, I'm still not a fan of Robinhood, like platform-wise, like trading platform-wise. It's great for like easy use for people that are like on the go, but I'm a serious trader. That's why I don't like Robinhood. Robinhood is not necessarily for like serious traders. Robinhood is for people that are on the go. They're in their car. They're like running to catch a train or something, and they want to make a quick trade. Robinhood is fantastic for those people. It's not something that someone like myself would use. I use Lightspeed. Lightspeed is a very advanced platform that, active traders and professional institutions use. Is what I've learned on. I've always traded on Lightspeed. The hedge fund I used to work at, they traded through Lightspeed. So I was trained on Lightspeed. I still use it today. But to Lightspeed's fault, their mobile platform is actually garbage. Their mobile platform sucks. But I never owned Robinhood. I still don't own it. I had no intention of buying it. The stock has done so incredibly well over the last couple of years. And just my hat goes off to the management team at Robinhood, because they've really turned this company around. After the IPO, this stock got slaughtered. And it was the topic of so much criticism and so much negativity. There was regulatory issues. They tried coming after Robinhood, saying that they gamified investing, and there was regulatory action against the company and the CEO, and he was attacked. And it was ugly a couple of years ago for Robinhood, and they turned it around. The stock has done phenomenally well. Okay. Earnings per share was $1.01. Analysts were expecting 42 cents. Do you understand how insane that is? $1, and analysts were expecting 42 cents. You more than doubled the expectation on earnings per share, and sales were also beat at over $1 billion in sales. Analysts only expecting 944 million. They did not provide full year 25 outlook for their total operating expenses, which was interesting. But their crypto revenue is up 700%. And I think that's really the driving force behind Robinhood moving to the upside, is that the company really began to couple themselves and pair themselves to the crypto market. And what once was, hey, trade options and YOLO, GME, and AMC, and that's how Robinhood came to fame, was open up a Robinhood account and buy some GME call options. That's what got Robinhood going. But they have shifted away, and they've paired themselves with crypto. And it shows in their earnings. Their crypto revenue is up 700%. So they are becoming a very active crypto platform. And with Bitcoin making new all-time highs, pushing into the 100K mark, this is how you're now sitting here with Robinhood that's been absolutely exploding to the upside. And I don't think that there's really any reason to feel like anything's going to change. I think that they've done a phenomenal job. And my hat goes off to the management team. I think the stock is extremely extended. I certainly would not be a buyer of it now. But if this thing pulls back underneath $50, I think it's fine to go ahead and step in and buy it. That's honestly what I think. Connor, I don't know what that means, brother. Everyone should buy more Reddit. They're just mad we're all making money again. What does that mean? Connor, this is what drives me nuts about like the Reddit crowd. It's like no one is mad that people on Reddit are making money. Literally nobody is mad that Reddit traders are making money again. None of them care that any Reddit traders are making money again. The stock is not down because they're mad that retail traders are making money again on Reddit. It has nothing to do with anything. But this is like that mentality that people had during like the AMC and the GME stuff, where like everybody thought that there's this evil force that is literally rigging things against you and purposely pushing stock prices down to screw you. It's not the way that the markets work. Guys, I worked on Wall Street. Okay. I worked at a hedge fund, and Connor says, well, then why is Reddit down then? Connor, Reddit is down because they missed miserably on their daily active user count. Analysts were expecting them to add a certain amount of new users to the platform, and they missed horribly. That's why the stock is down. Not because Wall Street is mad that Reddit traders are making money with call options again on quantum stocks. That's not why the stock is down. It's insane to me that there's such a large group of people that haven't learned anything over the last several years. They haven't learned anything. They literally went through the entire GME and AMC situation with meme stocks and just learned nothing. They literally watched AMC basically go to freaking zero and just learned nothing about that experience. If you want to make money in the market on a consistent basis, you have to learn how to actually participate in the market like a professional does. This is not a matter of retail versus institution. An institution is going to do everything they possibly can to make sure that you lose money. It's not the way that the market works. I know that was like this sexy conversation for everybody to talk about during COVID, and there was like this big movement against like short sellers and everything else. Newsflash, short sellers are part of the market. They are necessary. It's liquidity. Somebody has to think a stock is going down and somebody else has to think a stock is going up. That's how a market works. If nobody thought a stock was going to go down or nobody thought a stock was going to go up, you wouldn't be able to sell a single share. You wouldn't be able to buy a single share during a day. There are people all over the world, millions of people that think something's going up or down. And that's what makes a market. It has nothing to do with whatever these ridiculous Reddit conversations are talking about, oh, they're trying to knock they're trying to knock the stock down to scare all of us. No, it's not what's happening. It's not. If you like Reddit, 180 and 160, those are support levels. On a chart, it is support. If you like the stock, buy it at 180. If it gets to 160, buy more. Those are your support levels for the stock. Not because the institutions or they're going to be happy enough that the stock is down enough. We got enough retail traders out. Now let's go ahead and buy the stock and we can screw everybody else. No, those are support levels. That's where the buyers are going to sit. The stock gets there, buy it. You have to get rid of that mentality, because with that mentality, I'm not, I know it sounds like I'm like scolding people or it sounds like I'm being condescending. I'm not trying to be. It frustrates me to see so many people that still just don't grasp what it takes to be successful in the markets on a consistent basis. Because if you don't change that mentality and you don't change that thought process, this is coming from someone that's been doing this for 18 years. I worked on Wall Street. I worked at a hedge fund. I was one of the people that everybody on Reddit hates so much right now. I was on Wall Street. And a lot of people want to say, literally during the AMC situation, I told people to sell AMC in the 60s and 70s on this live stream, and I got crucified. People were like, oh, how much did the hedge funds tell you to, how much did the hedge funds pay you to say that? I'm like, you know how stupid you have to be to think that a hedge fund is going to come to a YouTube person and say, I'm going to give you money to tell everybody to sell the stock? You know how stupid you have to be to actually think that that takes place and that's the reason why the stock was going down? It's not the reason why the stock was going down. The stock was going down because AMC is a piece of shit. It is a piece of garbage. And when that stock went higher, I was telling everybody, guys, get out. This is a short squeeze. It's not a good company. It's not a good stock. They're not a good financial situation. Now that stock is down 98.5%. And it's never, ever going to go back to where it was during that short squeeze for as long as the rest of you live. It was a massive, massive pump and dump, and everybody got left holding the bag because they thought that the system's rigged. They thought the stock was going to go to 1,000. It's just not. It's not the way it works. I want you guys to understand the way that it actually works because you can make a hell of a lot of money doing this. You just have to do it the right way. You've got to think the right way. And coming into the markets every day, thinking that these fictitious creatures and groups are manipulating the market just to screw you out of your $1,000 account is the wrong way to think about it. It's not the way the market works. And if you think that way, you will lose in the long run. I promise you. If you want to change the way that, if you want to actually take advantage of the markets, I will show you everything that I have learned in my 18 years. I will show you exactly what setups I look for. I will explain to you my exact analysis, as will the other 8 professional traders that are moderators at True Trading Group. We do this for a living. We have done it for a living for the last 2 decades. It is how we put food on the table. This is not just a gambling thing for us where we're going to YOLO some call options and see what happens. This is our livelihoods. And it is how our members are able to make money with us. And that is what matters most. What matters most is, are our members able to consistently make money from the platform that we have here at True Trading Group? That's what matters most. And I'll prove to you that that is in fact the case. Don't take my word for it, because at the end of the day, who am I? Just some guy on YouTube. Don't believe me just because I say it to be true. Members of TTG that are on this live stream right now, if you guys are making money, go ahead and type the number 1 in chat right now. If you make money with True Trading Group, it's a very simple, straightforward question. If you make money with True Trading Group, type the number 1. And anybody that's on here that's not a member, and I know we have many, if you're not a member, just see how many people type the number 1. These are your peers. Every single one of these people started out in the exact position you're in right now on a live stream. They learned more with me in an hour and a half on a live stream than they learned in the last 2 years doing this on their own. They joined True Trading Group. They invested in themselves. They joined a platform that gives you tools, resources, data feeds that professional traders have access to. We are building the retail version of a Bloomberg terminal. We have real, true level 3 data directly from the NASDAQ. That's a regulated data feed for professional institutions that carries an additional fee from FINRA. We have it. We signed a data partnership agreement with the NASDAQ. You think the NASDAQ is going to sign a data partnership agreement and FINRA, and we're going to allow to get a professional data feed if we were some mojo little, stupid, BS scam type of trading chat room? No, we are a global fintech platform with 10,000 members from 114 different countries. The NASDAQ invited us down to the NASDAQ when we signed our data partnership agreement. My business partner and I got a tour of the NASDAQ facility. We got to witness the closing bell. They even put our company name and logo up on their screen in the middle of Times Square. There it is, right there. There's my business partner and I at the NASDAQ. And then they put our company name and logo up on their big LED screen in the middle of Times Square to say congratulations. This is why our members make money, because they don't approach the markets as this evil cohort of market makers are going to try to screw them out of their money. Instead, they are learning the proper way to take advantage of the markets, which is no different than what I learned working at a hedge fund in New York when I went through their training program. They didn't let me touch $1 of their money until I went through their training program. That's the type of stuff that our members learn. I'm not going to tell you, and a lot of people hate me for this, I'm not going to tell you what you want to hear. I'm going to tell you what you need to hear. I'm not going to sit here and tell you, follow me, I'll make you $1 million in 30 days. I'm not going to tell you that because it's not going to be the case. The reality is making money in the market on a consistent basis is not easy. But the truth is it's also not impossible. And this stat you hear about, 90-something% of traders fail, that's probably true. But I can assure you that way more, okay, than 10% of the members at your trading group are making money on a consistent basis. And it's not because we have the inside scoop with market makers and the evil cohort that manipulates the stock market. It's because they actually know what they're doing. They're guided by 8 professional traders and myself every single day. We share our screens with you. You see what we see. We talk to you on the microphone every single day. We answer questions. We tell you what we're buying, what we're selling, where our orders are. You guys get all of it. Jesse says, I used to be a teaching member, and when I listened to Mike, I was making money. When I let my pride win and I didn't listen, I blew up my account and I lost $15,000. Just listen to Mike the first time, y'all. There you go. There you go. Jesse, if you used to be a member and you're still on this live stream, Jesse, if you want to come back home and you want to be a member of True Trading Group again, I'll do something real special for you. Jesse, if you want to become a member of True Trading Group again, I will do something special for you. Send a text message right now to 1-888-621-2127. Again, that is 1-888-621-2127 right down there. Jesse, that's for you. If you want to come back home and you want to be a member of TTG again, you text that number right now. Anybody else that wants to be a member of True Trading Group and you guys are interested at all in what is that you guys have any questions, you also can text that number. We're fully transparent. We're an open book. We'll answer anything you guys want to know. And to the market maker point, yeah, Loibo, thank you for that. We actually, to the market maker point, one of our moderators at True Trading Group is a former market maker. He was a market maker at Deutsche Bank. And he has more experience than I do. I've been doing this for 18 years. He's been doing this for like 25, maybe. He's got more experience than I do. But so we have a former market maker. Listen, if you guys, so my boy Douglas, I saw you said you just subbed. I appreciate the sub, brother. How much is your membership? I'll explain it real quick, and then let's get into we still have to talk about inflation. And we still have AppLovin came out with earnings. Trade Desk came out with earnings. That stock's getting slaughtered. We still have other stuff to talk about. I'm sorry that I kind of got thrown into this tangent, but I'm passionate about this stuff. You know, I see, like I said, we have 10,000 members, and I've seen way more than that of people that have come through True Trading Group over the years and trial members and everything else. I know what works and I know what doesn't. It's not like we have 500 members and it's just like this small little sample set. We've had tens of thousands of people come through this platform. I see what works for members and I see what doesn't. I'm passionate about this because I know I look at myself and look at where I am in my life at my age and the financial goals that I have achieved thus far. And I know that none of it would have been possible without my knowledge and skill that I have when it comes to the markets. So I, more than anybody, look at the markets and I say, I'm humbled to the point where I don't know where my life would be if I didn't have this skill. If I didn't learn this, where would my life be? Where would I be financially? What would I be doing with my life? I don't know. I just had my first kid 6 months ago, my beautiful daughter, and I get to sit at home every single day and I get to spend time with my wife and my kid at any moment that I want. I don't miss a single thing. My kid says her first word, I'm there. My kid eats food for the first time instead of breast milk, I'm there. My kid rolls over for the first time, I'm there. My kid takes her first crawl, I'm there. How many people are lucky and fortunate to say that? How many people are lucky and fortunate to say that every single night I get to sit down at my dinner table and I get to have dinner with my wife and my kid? How many people get to say that? Not many. And I do not take that for granted. But that's what's possible. That's what this allows me to do. So when people join True Trading Group and they're serious about it, don't join True Trading Group if you're looking for a shortcut. Don't join True Trading Group if you're looking to make $1 million in 30 days. This is not the place for you. There are plenty of other Discord groups out there for you to do that. There's plenty of other places and groups that'll say, join me. I'll show you how to make $1,000 in 10 minutes every single day. I have this 99.9% fail-proof system. Go join those platforms. That's not what you're going to get from me. What you're going to get from me is if you're serious about this, you're serious about improving your financial situation, you really want to learn how to make money in the markets and keep it, join True Trading Group. You're willing to give me a couple hours a week, you can actually put in a little bit of time, energy, and effort to actually learn what it is that I'm going to teach you, great, join True Trading Group. then True Trading Group is for you. I would love to have you part of our community if that's the case. All right. That's it. I'll tell you how to join. I'll tell you guys how to join. If you're interested in joining True Trading Group, we have 7 laptops remaining from yesterday. Okay, so we have some laptops that we're giving out for free for people that join True Trading Group. It's like our gift to you. It's not a MacBook Pro. It's not a $2,000 gaming laptop. It's a free HP laptop. Microsoft 365, Windows 11, it's totally free. It's yours. We even cover the shipping. We have members in 114 countries. Doesn't matter where you live. I'll get you the laptop. Shipping's on us. It's free. There's only 7 of them left, though. So I'm trying to only give them to the people that really want them. Like if all you're going to do is get the laptop and sell it on eBay, put the money back in your account, I'd rather not give you the laptop. I'd rather just give you a cheaper price. I'd rather give the laptops to the people that need them to use with their trading. So here's the deal. You guys have a choice. If you would like a free laptop, go to ttgoffer.com. If you do not want the laptop, instead you'd rather have a cheaper price, send us a text message to 1-888-621-2127. Again, I'll repeat that. The number is at the bottom of the screen. 1-888-621-2127. Now, the membership to join True Trading Group, it's going to cost you $1,047 for the whole year. That includes the laptop. If you don't want the laptop, I can give you a cheaper price than the $1,047. So text the number at the bottom of the screen if you don't want the laptop. Instead, you'd rather have a cheaper price. Everything on ttgoffer.com is included in your membership. You're not paying $1,047 just to get my trade alerts because I think I'm so awesome. The $1,047 includes our entire 22-course curriculum, which is a simplified and expanded upon version of the training that I received working at the fund in New York. It includes Benzinga Pro's real-time news feed and Squawk Box feature. It includes TradingView's premium charting software. It includes the Trade Ideas scanner. It includes dark pool data, unusual options activity, options flow, short data, congressional trading data. All of that is included in your membership. There is no upsell. There is no hidden cost. There is no additional fee. You join True Trading Group and you get everything on that page, ttgoffer.com. You get everything on that page for the entire year. Okay? We also give you a double your money back guarantee. I know I talk a big game on this live stream. I do. And some people maybe don't like me for it, but I back it up with my own money. When you join True Trading Group, you're going to put up $1,047, but we're also going to put up $1,047 because I believe that a fair business transaction, the way that this should work is if you can't make any money with us, then we wasted your time. So you're going to put up $1,047. I'm going to put up $1,047. And if you make your $1,047 back, I'm going to keep your $1,047. Fair? I think that's fair. But if you don't make back your $1,047, I'm going to give you yours back and you're going to take mine. We give you a double your money back guarantee at True Trading Group. The way that it works is you join today, you pay $1,047. I ask you to do the following things. Go through our courses, pass our quizzes, attend one study group. We do study groups every week. I'm asking you to attend one. Take your time. You have the whole year to do this. Go at your own pace. If you do those things and you are still not able to make enough winning trades with us to equal the $1,047 membership fee at least one time, you can't do that. I will give you back $2,094. It is right there on the checkout page. It is in black and white. It is real. Go read it. I can offer you that double your money back guarantee because our refund rate is less than 2.5%. If it was 15%, I wouldn't be able to give you guys double your money back. But because it is so low, I could, and I will. Because I don't think you need the double your money back guarantee, but it's there to give you peace of mind, and it's there to hold us accountable. That's the way it should work. Matthew says, guys, I joined back in November of 23. Well, it's been a roller coaster of a ride and a learning curve. I just had my first 5-figure month last month. These guys are legit, and I am a lifer. That's from Matthew Enright, who just had his first 5-figure month with us. My boy Willie Cabrera says, like your buddy relaying signs from second base. I love the baseball reference. These guys tell you what's coming. All you have to do is go to ttgoffer.com. Okay, there are 7 laptops left. As long as you see the laptop on ttgoffer.com, then that means you're getting one. Again, if you don't want the laptop, okay, if you don't want the laptop, instead you'd rather pay less than the $1,047, then text 1-888-621-2127. Like I said, those 7 laptops are the last 7 we have. So I'm really trying to hold on to them and give them to the people that really want them. So if you don't want it, we won't include it, and we'll give you a cheaper price for it. All right? So there you guys go. That's that. All right, let's get back on over to the charts. I hope that answers some people's questions. Let's talk about, we still have some other companies that reported earnings. One of them is AppLovin, which is another software name that I really like. This stock has had a ridiculous run. This was a $90 stock in September. It's now $480. Yes, you heard that correctly. This is a $90 stock in September. It is now at $480. I really like AppLovin. It's a software name. My theme for 2025 is long software stocks. And I think semiconductors are going to underperform. And I think AI hardware underperforms. I think AI software outperforms. That's my theme for 25. We have gone long a lot of software names. The software names that I really do like: Snowflake, Salesforce, Cloudflare, ServiceNow. There's Oracle's in there. AppLovin, obviously Palantir, which is one of my best performing software holdings. Rubrik, the cybersecurity names like the CrowdStrikes, the Palo Altos, the Fortinets, even a Zscaler I do like. These are all my software names. Okay. If you don't want to buy all of those stocks, and I don't expect people to buy all of those stocks, the IGV ETF is a wonderful substitute. The IGV ETF is a software ETF that owns a lot of different software companies, and it gives you exposure to a very broad base of software names. This ETF just recently experienced what, in my opinion, is one of the cleanest cup and handle breakouts that I've ever seen in my entire life. And I'll show you. There's your upward move from 2020 to 2021. There's the cup from 22 to 23. And then there is the handle in 24. And then there's the breakout. And then you pull back in to retest, found support above that prior high. I think that the IGV ETF is a buy anywhere from 100 down to 90. This entire area, I think, is a buy. I like this ETF for the long term. I think that the next 3 years or so, software is going to have its time in the sun. The last couple of years have been all about AI hardware. Hardware is all about the semiconductor chips, the computing power, the data center, and all of that. But now that you have the hardware built, it's all about now monetizing that AI investment. It's about application rollout, and you need software to do that. Think of it like you're building a house. When you build a house, you have to lay the foundation and put up the wood framing, right? Think of that as the hardware for the AI computing power and AI application. That's the hardware. That's the semiconductors, right? You need a foundation and you need the wood framing of the house. Once that's done, and then you put the sheetrock and everything, and then you put the siding and everything, and the outside, the exterior of the house is complete, right? The exterior of the house is complete. You can't list the house for sale yet because the inside of the house is just studs. Well, what do you need to do now? You need to finish the interior of the house. You got to put furniture in the house. You got to put art on the wall. You got to put the granite countertop in the kitchen that everybody loves. You need the wood flooring. You need the tile. You need all of that. That is the software. The software is what will take the framework that you built and turn it into an asset that you can monetize. That's what you have to think about. And I think that over the course of the next couple of years, you're going to see this transition in where companies are spending their money as it relates to AI. It's been all about buy as many of these semiconductor chips as we possibly can to get as much computing power as we possibly can. And a lot of these orders got pulled forward because there was such high demand and such low supply that when a company got their hands on these semiconductor chips, they over-ordered. They over-ordered them. Now it's time to monetize that. That's where software comes into play. That's why I'm so bullish on software. The IGV is a great ETF for you guys to take advantage of it. If I'm right about this trend, the next couple of years, I think this ETF does very well. And you're more than welcome to just search what companies are in the IGV. There's a lot of companies in there, but really focus on the top like 20 or so, which are the largest weightings and the largest holdings of the company. Some of their largest holdings are Microsoft and Salesforce, Palantir, are some Oracle, Adobe, CDNS. These are just a handful. Datadog. These are a handful of companies that are in this ETF. Okay, so that's that. All right. So AppLovin, huge move to the upside. And the stock, stock's all-time highs. It's up 31% after being up hundreds of percent. Where does this stock end? I have no idea. The stock is at an absolute monster. Now it's at $500. It was just at $480. Now it's at $500. It's at $500. So, where do you buy it now? I don't know. Pullbacks into 400, 420 is where I would say go ahead and take a stab at it long. All right. And then last but not least, Trade Desk. And this is a disaster. All the earnings that we've covered so far have been good, except for Trade Desk and for Reddit. Like I said, Reddit trading to the downside, but the earnings actually were good with Reddit. It was their active user count, their new users, which really fell short. That's why that stock is down. But Trade Desk, this is nasty. 59 cents earnings per share against 56-cent estimates, and they missed on sales. 741 million versus 759 million is what was expected. Their Q1 revenue is expected to be 575 million. Analysts were expecting 592 million. So they missed on revenue on the quarter, and they missed on revenue on their guidance for the next quarter. So even though they authorized a $564 million share buyback, investors aren't impressed. The earnings miss and the lower guidance is far too much. The stock is down 25% on the day. We have to welcome Lincoln. Lincoln just joined, guys. Everybody welcome Lincoln, newest member of True Trading Group. Only 6 spots now remain for that laptop. So Lincoln did take that free laptop. So that's only 6 of them are left now. Again, if you do not want the laptop, I will give you guys a cheaper price, but you must send a text message to 1-888-621-2127. Text that number also if you have any questions at all, anything you want to know. We're fully transparent. We are an open book. But Lincoln, welcome to the TTG family. Now let's head on over to the SPY and let's talk about the inflation data from today because it was a nasty report. We got a hotter than expected CPI number on every category. Month over month, year over year headline, month over month, year over year core. All 4 segments higher than expected. Not good. Big gap down. And then the markets did something that surprised me. I'm not surprised by the market often, but sometimes the markets do things that I was not expecting. Today is one of those days. I will always come on this live stream and I would always tell you, hey, this is what I think the markets do, as I do every day. I come on the day before. I tell you what I think happens tomorrow. I don't tell you what happened today. Anybody can do that. Not a Monday morning quarterback. I say, this is what I think is going to happen tomorrow. This is what I think is going to happen next week. These are the stocks I'm buying. These are the stocks I'm shorting. These are the calls. These are the puts. This is what I think the overall market does. And sometimes I'm going to be wrong. I'm right a hell of a lot more than I'm wrong. But today is one of those days that the markets did something I was not expecting today. I said yesterday, if we got a hotter than expected CPI, and I no problem talking about that. I said yesterday that we got a hotter than expected CPI number, that I thought that we would gap down, obviously, but then I thought we would have stayed weak. I would have thought we would have stayed weak, and I thought we would have drifted down into like the mid to low 590s over the course of the next couple trading days. It's not what happened. We had the big gap down today, and your very first support level, which was the 50-day moving average on the chart, that's that dark blue line you see on my screen, the very first support level held. This marks the third consecutive fundamental catalyst caused gap down that the markets bought. The third in a row. That tells you something. What the markets told me today was they care more about earnings than they do the hotter than expected inflation. Earnings up until this point have been very good. 77% of the S&P 500 that has reported earnings so far have beat earnings expectations. Earnings have been beat by an average of 16%. Analysts were expecting earnings to grow by about 11%. They're 16% higher. So earnings have been, as a whole, phenomenal. The job market has remained stable. And today's price action tells me that the market cares more about earnings and the job market than they do the uptick in inflation. This is like the 5th month in a row that inflation has gone up. This is not a new thing. We hit a low in inflation in August, 2.4. Since then, we have had reads of 2.4, 2.6, 2.7, 2.9, 3.0. Inflation has been going up, not down. And I felt like today, with a hot number, that we would have stayed weak. But the markets, to my surprise, bought it back up. This is the third consecutive fundamental catalyst caused gap down that got bought up. What's the first one? DeepSeek. So we had the big gap down with DeepSeek, right? And what happened? The markets bought it back up. Then we had the big gap down with the tariff news. 25% tariffs on Mexico and Canada. Big gap down. Then those tariffs were delayed, put on hold. The markets bought it all back up. Then today, we had a gap down today with the hotter than expected CPI number, and the markets bought it right back up. I'll go to an intraday chart just so you can see. Right, here's the big gap down this morning. See, big gap down this morning. And then as the day went on, the markets bought it back up. So this is 3 consecutive large gap downs that got bought. And to me, I'm like, that's not at all what I would have anticipated. I mean, the first 2, we were all over. We thought that the DeepSeek gap down was an overreaction. We went long that day, actually on a lot of software names. We had a fantastic trading week, the week of the DeepSeek. We went long on that Monday, and it was a phenomenal week for us. Then you had the gap down with the tariffs. And as soon as we heard that Mexico tariffs were put on hold, we went long, and we figured that the Canadian tariffs were going to be a lot of the same. And the 25% tariff on those countries was just used as leverage and negotiating chip. And we went long that day. And then we caught the nice long over the next couple of days as well. And that was a really phenomenal week for us also. I didn't expect us to recover the gap down today, though. So markets did something I really wasn't expecting. You have PPI inflation data tomorrow. If the PPI inflation data tomorrow is hotter than expected, I don't know how much that really matters. I mean, it would have to be so much hotter than expected to make me feel like the markets are going to sell it off, because why not sell off today with the CPI number, which is used as more of a gauge than the PPI number is? I feel like the real thing to think about now is that if the PPI number is light, that would be a surprise, and that can move the markets back to the upside. And you almost kind of sit there and you start to think about, there's a lot of good looking long setups if the PPI number comes in light tomorrow. Some of the setups I'm looking at long are, yes, Snowflake. I think Snowflake moves into the 200s over the course of the next couple of weeks. We're going to look for that Snowflake long. I think Microsoft is gearing up for a bounce off of a major support level. Here's your major support level on Microsoft. It looks like Microsoft. I wouldn't be surprised if we got a little bit of a pop back and a bounce back there on Microsoft. I think that looks pretty decent for the long setup. This Upstart had this huge, massive gap up today and has a decent short position. I think if Upstart holds 85, I think you could see Upstart maybe push itself higher into the 90s and have a little bit of a short squeeze as you have a decent short position that's on that name. I just look around and I think that there are some pretty decent looking long setups that are out there. And we'll have to just wait and see what this PPI number comes in at. But from where I sit, I'm impressed with, why isn't this coming up here? I'm impressed with what the markets did today. And I think you have to just continue to buy those dips until proven otherwise. Today was impressive, because there really wasn't a reason. There really wasn't a reason for the recovery. the reason for the DeepSeek recovery was everybody found out that it wasn't true, that they spent only $6 million recovered. Then the tariffs, there was a reason for the recovery. Oh, the tariffs were put on hold. The markets recovered. Today, the hotter than expected CPI number, the markets got down and just went up. Nothing changed. Jerome Powell didn't say anything in his testimony in front of the House Financial Services Committee that made anybody feel any different. They didn't even freaking ask him any questions about inflation. This is a joke, those things. So nothing really changed. The market still moved higher. So I think that was a real sign of strength and broad-based strength. And I think that the risk would be to the upside if the PPI number were to come in lighter than expected. I think that would be a welcome surprise. And the market's probably move higher. So we'll have to wait and see what happens tomorrow. But today, definitely a little bit of a head scratcher for me in the overall market. All right. So that's it there, folks. That kind of wraps things up. That kind of does it there for me. Guys, again, if you have any questions, send a text message to 1-888-621-2127. Phone number's right down there at the bottom of the screen, 1-888-621-2127. Text that number with any questions that you guys have. If you do not want the laptop, instead you'd rather have a cheaper price, you also text that number. You will get a double your money back guarantee. I don't think you need it. It's there for peace of mind. If you cannot make back your membership fee at least one time during your membership, we will give you back not just your membership fee, we will give you back double your membership fee. The double your money back guarantee is right there. Yes, it is real. Go check it out. It's in black and white on the checkout page. I can do that because our refund rate is less than 2.5%. I'm happy to do it. If you would like the free laptop, just go straight to ttgoffer.com. Check out, and you guys are good to go. We do accept PayPal credit. We do accept Klarna. If you would like to use one of those financing options, we do accept those payment forms. Okay? So that is all, folks. Thank you for tuning in. Hope you enjoyed my rant. I'm sorry. I'm passionate about this stuff. That's all. All right. Yes, I'm still short FSLR. Let me talk about that. Actually, I forgot to mention that. I'm still short FSLR. We've been short FSLR. We've been capitalizing on this nice move to the downside. I'm still short. I'm trying to see if we can break 158 tomorrow. So we have a clean support level there at 158 double bottom. If we break 158, we should roll over. So we'll see if we can break 158. I'm still short. I'm short from 169.50, and I added at 162.05. We took profits off today at 158, and we'll see if we can break 158. Okay, so that's it, guys. Have a wonderful rest of your night. My TG fam, I'll see you guys tomorrow morning as always for the PPI number. It comes out at 8:30. Good luck, everybody else, with your trading. Those of you that are not members, and I'll be back here tomorrow morning to go through some more earnings, and we'll talk about what happens with the PPI number. Right? Again, ttgoffer.com. 1-888-621-2127. Have a wonderful rest of your night, guys. Subscribe to the channel, smash the like button, turn on your notifications. Do not ever miss out on these lives. I'll see you guys all tomorrow. Take care, folks.